Moving on now, the last time it was widespread in the United States, it resulted in the death of 50 million birds. Over the past week, a highly lethal form of avian flu has been confirmed in multiple states. The poultry industry and government officials say they have plans to more quickly stop the spread, but they are advising that poultry producers should take precautions now. To discuss this topic, as well as the cattle markets, we visited with UNL Livestock economist Elliott Dennis. We began that conversation by breaking down the latest news on the avian flu.
Yeah, Highpath Avian Influenza, or HPAI, as it's commonly referred to, has been around for a while. We really started to see this in the early 2000s. First was over in Asia, and since pretty much migrated to the U.S. Really what we're talking about that is as far as production and supplies, is we're thinking about where these avian influenza issues happen in the different flyways, bird migrations. When we start to get more cases across different flyways, it has a greater potential for the impacts on production. Previously into this year, we've only been seeing it in the Atlantic flyway, which is in the eastern part of the U.S., but it's been primarily contained to the wild bird flock. That's not a problem. This case in Indiana, it was in a turkey population, but commercial, and so that's where it gets more problematic and has potential impacts for both the operation and consumers at large.
And since that first initial confirmation in Indiana, we've seen a few other states confirm that in terms of commercial flocks. Have you been able to track and see what consumers' reaction to that has been in the past? And knowing that, what do we look for in the future?
Yeah, so there's really two things. There's first the countries that will start to ban exports. So Mexico has already said is not taking those exports from Indiana. I'm sure other states will follow suit. And this really comes to the point of regionalization inside of trading agreements. If we can contain it to a certain location, then we can continue to trade, but just not from those certain areas. That's a huge benefit of the trade. Consumers, the more attention this gets in the media, what we know is that the more press coverage reduces consumption on these products. Generally, it's somewhere in the range of 15 to 20% reduction in consumption. Now, when people don't spend it on that, they tend to substitute into other products such as pork and beef. That has a lot of implications given that pork and beef have already had large increases in demand. This will only further improve that.
Certainly a story we'll keep a close eye on here at Market Journal. Of course, when we have you on, Elliott, we like to talk about the cattle market, so let's do so today.
Sure.
And jump in with this first question. As we started 2022, a big conversation had to do with the surge we were seeing in COVID-19 cases, and because of that, the packers are slowing down their slaughter. Have we seen a recovery in that to this point?
Yeah, we've actually seen, particularly in that end of January, beginning of February, we saw a lot of COVID absenteeism, and also weather really was an issue to getting cattle to the market. We've been able to improve that slaughter capacity, but we've been improving at a time when beef prices have been rising. Really what that impact for retailers is that they just start buying less of that product. And we've already started to see that with the choice cutout. Those prices have started to soften. And primarily they're softening in different primals. Normally we look at the rib and the loin as the value drivers, and so this decrease in the choice cutout has to do with decrease in the loin primal, and really that's the indication that retailers are shifting to more value-added products rather than these kind of high-end products. And some of that's been driven by beef inflation. It was up about 16% retail beef prices, and pork was in that 12 to 14% range, so considerably higher for consumers as they go to retail.
What are you seeing when it comes to hay inventory in particular?
Yeah, so the Nebraska, Iowa, and Kansas are in particular, when we look at hay inventory change between 2020 and 2021, have been are in pretty good condition. We were actually up about 11% in hay inventories, which is surprising because when we've seen a lot of that hay moving, where is it going? It's going to the north, it's going to the west, to Colorado, South Dakota, and North Dakota. And that's really where we're seeing a lot of that herd liquidation. And rightly so, because they were down in some of those areas, down 50% on hay stocks. So that's just a bad condition. So when we see elevated hay prices in Nebraska, it's not necessarily going within state, it's going out of state.
Elliott, I asked you what's been catching your eye when it comes to these cattle markets. You mentioned beef exports. Talk about that.
Yeah, so when we look at beef exports, we're primarily looking at income growth within certain populations. And so we know that beef is primarily a luxury good in a lot of these developing countries. And so when we see income growth in basically upper middle class to high middle class, more people moving into these brackets, we start to see a pull for the beef. When we look at most of that income growth is happening in Southeast Asia, Vietnam, Singapore, in even parts of China. This is a really big opportunity, and we'll start to diversify a little bit more. There's been some concern that maybe we're relying too much upon China, especially with their massive growth. And so developing these other nations is going to be really important and really following the growth in the right type of population.
Mm-hmm. As always, final word is yours, Elliott. What would you like to leave our viewers with today?
Yeah, so there's a lot of optimism right now in the market. Prices are generally rising. We look at CME, we adjust it to Nebraska basis. We're looking at pretty high prices in the fall. I think it's a good opportunity to look at risk management and potentially offsetting some of that risk. This is pretty common in the corn market, right? We see higher prices. We can start to price in some of that production. As we go into the calving season and throughout the production year, I think looking at some of those considerations, potentially pre-pricing some of that with available and really affordable risk management tools.